With its strong and consistent expansion program and planned demerger of pharma business, is Aarti Industries an opportunity to invest into future? Ranked among the top global players in benzene-based derivatives, Aarti Industries cater to select list of clients like BASF, Bayer, DuPont, 3M and the like. Aarti Industries is predominantly a specialty chemical company, also having pharmaceuticals business. Specialty chemicals dominates with a revenue share of 84% and the balance from pharma business. In its specialty chemicals business, it has three value chains of benzene, toluene and sulfuric acid, and they find application in agrochemicals, fuel additives, rubber chemicals, pigments, paints, etc. From its pharmaceutical segment, the company caters to innovators and generic companies. It supplies active pharmaceutical ingredients, APIs and intermediates. Aarti has strategically located plants closer to ports in Western India, Maharashtra and Gujarat, 15 plants catering to specialty chemicals and 5 for pharma. The strong point with Aarti is its capacity utilization in specialty chemical plants bordering 85%. With its target to improve capacity utilization to 90%, substantial growth in EBITDA is expected. Taking specialty chemicals and pharmaceuticals together, it exports almost a half of its production and caters to North America, Europe and China in a big way, and also covers Japan and rest of world. Dealing in agro intermediates at the global level, company has long-term contracts with players like BASF, Bayer, etc. The contracts range up to 10 years. One of such contracts was cancelled by the customer as they stopped manufacturing APIs. Instead, they started outsourcing it. The company informed stock exchange on 15th June, and what followed in subsequent months is quite surprising, as the price moved in an ascending fashion for over 2 years till the price reached lifetime high of 1168 on 19th October 2022. This is a reflection of the marketing edge Aarti Industries has got in the field of specialty chemicals, more particularly agro intermediates. Aarti Industries, with all its inherent strengths, could not be an exception to the global situation of increasing input prices, mainly due to Ukraine conflict and the disrupted global supply chain. There were impacts on the input material, mostly crude oil, petrochemical intermediates and other fuels, and that affected the bottom line of the company to some extent. The impact of input inflation, which was slightly higher in respect of materials as compared to employee expenses and other expenses. At the end, EBITDA suffered to the extent of almost 3%, and the company could withstand input inflation due to two reasons: better realization and also ability to pass on a part of the input inflation to the customers in the normal course. Financials for the last 2 years in specific, where revenue has gone up accompanied by profit after tax, and PAT percentage has also shown improvement. When we compare FY21 with FY22, PAT has more than doubled from 535 to 1307. It includes termination fee received in the current year, rupees 631 crores for cancellation of 2020, and as a result, PAT percentage has moved up to 20.5% quite abnormally. But the real strength of performance is evident in EBITDA, where EBITDA percentage has fallen continuously for 2 years after FY20, when it fell from 23.3% to 21.8% and 20.4% in the recently concluded year. On a quarterly basis, revenue was moving quite positively. Earnings before interest, tax and depreciation was also showing a momentum going along with revenue. But EBITDA percentage was showing the weakness with perfect clarity. 4 quarters of EBITDA as compared to previous year was on the increase, but the EBITDA percentage was quite disappointing, more particularly during the last 3 quarters: September quarter, December quarter, followed by the latest March 22 quarter. All quarters fall in EBITDA percentage. Market observes this stock very closely, and its response in respect of these 3 quarters has been direct and proportionate, landing the share price into the bearish zone after crossing 200 EMA on 21st April. On a compounded annual growth rate basis, from 5-year to 1 year, we see a momentum growing year after year, coming closer to the latest year. It is reflected in both revenue as well as EBITDA, when 5-year CAGR is around 15 and last 1 year has been of the order of 30 plus. Net worth also reflects a similar growth, but it is more also because of the QIP issues made by the company, and retained earnings 30% 5-year basis and closer to 70% on an annual basis. But where the company disappoints is an investor who gets a 5-year CAGR of 31% in market cap and last 1 year growth is hardly 6%. For those who are already invested, it may be disappointment and it might be an opportunity for a prospective investor, the price being at a lower level. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. Hope you will find the video interesting and useful. Aarti Industries comes out very positive when it comes to achievement in production, be it nitrochlorobenzene, where the growth for the last 2 years has been 12% and 15% respectively, and it is repeated in respect of hydrogenated products, where the growth is 14% and 18% respectively, and so also the growth in nitrotoluene has been quite impressive, with 48% for previous year and 25% for the recently concluded year, and all three forming core of specialty chemicals. The company derives a lot of strength from the impressive growth. The cash flow of the company is quite revealing. Strong operational cash flow, almost crossing 85% of its EBITDA. Well disciplined working capital movement. Dividend not significant, not a motivator. Substantial operational surplus after working capital adjustments. Fixed assets quite impressive, growing year on year. 2 QIPs and regular borrowings, and impressive cash balance kept at every year end on the balance sheet. Very disciplined and very effective. On promoter shareholding, fall is largely due to readjustment on QIP issue, no pledge of shares. Mutual funds fall observed, FPIs going up also because of QIP, upward surge in insurance holding, stable and strong shareholding. Company's strength in competitive edge is mainly because of its continuous project expansions. Nitrochlorobenzene project expansion is completing this year, and similarly Tarapur and Vapi are implementing pharma expansion for US FDA. Company is quite proactive and it is planning to set up a concentrating nitric acid unit so that it can procure the nitric acid locally and convert that into concentrated nitric acid, and that is going to have continuity and certainty in the supply of one of its core raw materials. Another value addition for Aarti stock is its proposal to demerge the pharma business, and its application is awaiting decision from NCLT. The company value in market cap might be around 3,000 crore plus, and the intention is to have focus on the growth and expansion of the very potential pharma business. Among its peers, Aarti Industries stands out in respect of market cap, profit for the year, and the resulting price earning multiple. It appears to be at the lowest end among its group members, but 19.5 PE is based on the current year's profit inclusive of the termination fee, and when we remove the termination fee and recalculate the profit, Aarti's PE multiple rises up to 33.2. Even at the elevated PE, Aarti is as attractive as any other members from the peer group. Hope you found the video on Aarti Industries to your liking. You can access similar videos with rich content at our info card on Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your time, support and interest. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.